Dalio once said diversifying well is the most important thing you need to do in order to invest. Welcome to Money Matters. My name is Faith Katai. Investing in the capital market is not just about numbers on a screen. It's about building wealth, securing futures, and contributing to the development of the country's economy. Whether you are a seasoned investor or just beginning to explore, understanding how these markets work is very, very important. On Money Matters, our focus is on investing in the capital markets, and to help us understand what this is all about, capital markets, my guest in the studio is Lusaka Securities Exchange, LUSE's Business Development Manager, Grace Soko. Grace, welcome to Money Matters.
Hi, Faith.
Hi. Looking beautiful.
Thank you.
Okay, just to start simple, tell us, how would you describe a capital market?
So we like the word market because it's essentially a place where people who want money meet with people who have money. So the ones who have money are your investors who are looking for a safe place to put their money. And then the ones who want it are businesses who are looking to scale. And that's why we call it a capital market, because it's a good way and a safe, regulated way for you to raise capital for your business, either through stocks or either through bonds or any of our other medium to long-term note programs.
Great. You've mentioned something very important, stocks and bonds.
Right.
So what people hear about these words every day,
Yes.
stocks and bonds.
Yeah.
What are these? What's the difference between the two?
Okay, so stocks are basically your way of getting ownership in listed companies. So when you buy shares, we call you a shareholder, which means that you actually own a part of the business that you've invested in. What that comes with is the benefits of voting. There's also the benefit of dividends, which a lot of people get excited about, which is your profit sharing. But it's basically your way of telling the company that you're investing in that I'm part of your journey. Whether you make a profit, whether you make a loss, I am part of the journey. I'm a shareholder. Bonds, on the other hand, a bond is a debt instrument. So this is where you are lending money, either to the government or to a company. And when you lend money, you're not interested in whether there's a profit or a loss. The company has to honor their obligation because it's a debt. So they will have to pay you back on predetermined terms. Maybe the interest rate is, let's say, 15% per year for the next 3 years. Whether there's a profit or a loss, the company has to honor their obligation. Yeah.
Awesome. Let's talk about investment options in the capital market.
Right.
What exactly can viewers buy or invest in on the capital market? And could you give us examples of these?
Okay, so before I get into any of the investment vehicles, something that is very important for every investor, everyone who's watching, pay attention to your risk appetite. You need to understand how much risk can I take on. And usually when you're a little bit on the younger side, you are able to take on a lot more risk because you've got more time. You are still working. You still have an opportunity to make back any money that you may have lost. As you get a little bit older, your risk appetite tends to change, and you now want a lot more safer returns. You're not really interested in go big or go home. You don't want to take too many risks. Most of us are now thinking about retirement. Those of us who are 30 and up, we've got children to plan for. We can't afford to make mistakes, so we're very careful on what we select. So on that basis, a lot of what is available in our capital markets would be considered low to medium risk. Another thing, and I know we've had a lot of conversations around this, scammers tend to tell you this is risk-free. And it's very important for viewers to understand there's nothing that is risk-free, especially when it comes to investments. It's either low risk, medium risk, or high risk. So in our Zambian capital market setup, a lot of what we have available is low to medium risk. So on your low risk scale, you have things like government bonds, where you're lending money directly to the government through the Bank of Zambia. You have the stock market, which can be considered medium risk because it is a little bit volatile. It's a bit difficult to predict how the market is going to move, and that's why we say it's medium to high risk, depending on which company you invest in, obviously. There are corporate bonds. So corporate bonds, you are now lending money to a specific company. That one is also considered low to, I'd say, medium risk, but more on the lower risk scale. This is because it's more predictable. You know what your interest rate is, you know when the maturity date is, and it's easier for you to plan. There's also unit trusts. Unit trusts are collective investment schemes. In more mature markets, they call them mutual funds. So with these ones, there are low risk, well, low to medium, depending on what type of fund you're investing into. Again, it brings predictability, it's regulated. So there are a lot of options for Zambian investors, which will range from how young they are, how much money they have to start with. And as always, it's very important to consult a licensed investment advisor so that you have somebody guide you to say, okay, here where you are in life, this is how much you have, this is what we can start with, and this is how we will build.
Okay, so what are some of the things that people need to look out for before investing in a capital market?
So number one, set a very realistic goal for yourself. So you need to know why you are investing. I know we like to say, I'm investing for the future, I'm saving for the future. But what exactly are you investing in? So when you set a very clear goal, it'll also help you understand which investment vehicle to go into. Remember, certain investments have a set maturity date, and that makes it easier for you to plan. Things like stocks and shares, they do not have maturity dates. These are more long-term, and you need to be very aware of the fact that whatever money you are putting into the stock market, ideally, you should not be looking towards drawing down anytime soon because you need to leave the money enough time to grow. When you invest in a bond, for instance, it has a fixed maturity date, and you need to have a certain goal tied to that maturity date so that you know where to put your money. So biggest thing to look out for also is inflation. As an investor, you need to be very sensitive to the fact that the money that you are putting into an investment vehicle, the interest rate should always be higher than inflation. Because if you find that your interest rate is lower than inflation, you are actually losing money in the long term. Yeah.
Wonderful. So many people save money in the bank.
Yeah.
So what's the difference? Saving money in the bank from saving money in investing in the capital market?
So one thing that I always point out to people, there is a difference between saving and investing. So saving is where you're not too particular about the interest rate. You're just putting your money aside. It's kind of like when you're at home and you have a pot. You know how our mothers always used to have that biscuit tray where they'd put in money, and whenever there's a problem, they'll dig in from there. Or the money that would always come from the bedroom, she's hiding it somewhere. That money is not earning interest, but you are saving it for a rainy day, right? And that is what banks give you. Banks give you the security where you'll be able to say, my money is safe with the bank. And we usually say, put your emergency fund in a bank, because at least that way it's easy to access. There are ATM cards, you can go over the counter, it's easy. Investing is where you are now asking yourself, how do I make my money work for me? I want to be earning what we call a passive income. My money should work while I'm sleeping, basically. So when it comes to investing, the difference is investment vehicles tend to give you a little less liquidity, meaning you can't access it immediately. If your money is in a bond, you first have to sell the bond, or you have to use it as collateral to get a loan. If your money is in the stock market, you first have to sell your shares, and then you'll be able to get your money. So it's not as easily accessible as with a bank. Secondly, because of the nature of the investment, even the interest rates that you get tend to be a little bit higher. If we look at the Lucid, the returns last year were at about 68% returns, which is considerably higher than the bank. So it's very important, even as you are doing your, I'd say, investment planning or financial planning, be aware of the fact that the bank may not be able to give you as high of an interest rate as if you were to put it in the capital markets.
Wonderful. Let's talk about shares.
Yeah.
What are the benefits and risks of investing in shares of a company listed on the stock market?
Okay. We'll start with the obvious one. When you invest in shares, you now become a shareholder, which means you are now eligible for dividends. Your dividends are your share of the profit that the company has made in a financial year. Certain companies are very, I'd say, frequent dividend payers. We have Airtel that just recently announced a dividend for the first quarter. Of course, we're very excited about Airtel. It recently crossed $1 billion in market cap, which is a valuation, and they are very consistent. Airtel aims to pay dividends at least quarterly. There are other companies that are listed, such as Zambia Sugar, which tends to pay out twice in terms of dividends, depending on how the profit is looking. And it's very important as an investor, if you are following a dividend paying strategy, do your research and find out which companies pay dividends frequently. So dividends, one thing that's also important, and it's a risk as well, is that it's not guaranteed. Even if a company were to make a profit, if the board of directors feels that we need to put this profit back into the business, because remember, this is a capital market. The main point of raising capital is so that you can use it to grow the business. So if the board feels for that financial year, whatever profit we've made, let's plow it back into the business. Maybe we're expanding, maybe we want to, increase salaries, whatever the case may be. As a shareholder, you may lose out on your dividends, depending on the type of shareholder that you are. Ordinary shareholders, tend to be at the mercy of the board of directors. Preferential shareholders, on the other hand, a preferential shareholder is more likely to get their dividend more consistently, but of course, there are limitations to that. So the risks of investing in the stock market is, number one, dividends are not guaranteed. Even if a company makes a profit, they may or may not decide to pay out a dividend. Secondly, it is volatile. So it's very difficult for us to predict. We can't say if you give us 10,000 today, you're going to get this much by December. We're not sure how the market is going to move. Because remember, when you're investing in the stock market, you make money in two ways. It's either through dividends or through what we call capital appreciation. So that's in an instance where if you buy a share at 2 kwacha and then you sell it at 8 kwacha because the price has gone up, you have made a profit. But it can also go the other way, where you buy the share at 2 kwacha and by the time you want to sell, it's 1 kwacha. So it's a bit of a volatile exercise. So the risk is price sensitivity. You may have a situation where your portfolio value goes up and it may go down. And this is why in the beginning I said, understand your risk appetite. If you are one of those people that has heart palpitations easily, the stock market may stress you out. But the most important thing to remember is if you do your research and you pick your companies well, you will find a situation where you will ride out whatever shocks come. Prices will go up, prices will go down, but that's just how it moves. Whatever goes down tends to come up eventually. It's just a matter of how patient you are with the market.
Great.
Yeah.
We now pause for a short break. Don't go away. Welcome back. In case you have just joined us, you're watching Money Matters, a program designed to equip you with the knowledge and tools to make informed financial decisions. On the program today, we are looking at investing in the capital market. I'm joined in the studio by Luce's Business Development Manager, Grace Soko. Grace, some people think investing requires a lot of money. Actually, for viewers who are watching right now at home, who only have small amounts, how can they participate in the capital market?
So what we've done, and we're very proud about this at the Luce, is we've made investing easier than ever. There is a Luce mobile app, so you can go to your Play Store, whether it's iPhone or whether it's Android, search for Luce, L-U-S-E, mobile app. Once you download the app, you'll be able to create an account. This account, all that we need is your NRSC and your selfie, a picture, clear picture of your face. Once your account is created, again, we've made it easier, so you can transfer money into your Luce mobile wallet, either from Airtel or MTN Money, and the lowest transacting amount is only 10 kwacha. And the beauty with that is the cheapest share on the Luce at the moment is Clapton Reinsurance, and it's only 35 ingwe, less than 1 kwacha, which means anybody can start their investment journey. Another thing that we've done is you're able to check your portfolio. You can see how many shares you have. When you feel the need to sell, from the same mobile app, you can sell your shares. But of course, we want you to ride it out. We want you to put your money in bit by bit. You don't have to start with a lot of money. Even with 100 kwacha, start. The most important thing is start with what you have. When you look at unit trusts, for instance, which is also part of the capital market ecosystem, a lot of fund managers have made it easier than ever. Minimums are sitting at about 200 kwacha. If you look at Patumba as well, Patumba is part of the unit trust ecosystem. And Patumba, they're very low limits, even a 50 kwacha, even the challenges that you can do where you put a weekly amount. So it's very easy for you to start investing. You don't have to wait until you've got a big lump sum to start. If it's government bonds, the minimum is 1,000 kwacha. Yeah.
Okay. So what are some of the mistakes, some of the common mistakes that new investors make actually before investing in the capital market?
What is quite common is not doing research. We always tend to follow the one that's popular. What everybody is talking about, we say, let me try. And we don't go back to my initial conversation of what is your risk appetite? How old are you? How much time do you have? Can you recover if the investment vehicle you're investing in is not giving you the right returns? So always do your research. Secondly, always consult a licensed financial advisor before you do anything. When it comes to stock investing, we have licensed brokers, and those brokers act as your investment advisors. There are 10 registered brokers under the Luce, and you can find their details on the Luce website. There's a portion that says speak to a broker. We always encourage investors, before putting your money into any stock investment, speak to a broker. Let them guide you. They have all the information, and they'll be able to let you know that, okay, if you've got 500 kwacha to start, this is our strategy. If you are looking for dividend-paying companies, this is where we're going. If you're looking for companies that have potential to grow, this is where we're going. And they will sit with you and come up with an investment strategy. If you're looking at unit trusts, again, visit the fund managers. They're registered fund managers. The list is available from the Securities and Exchange Commission of Zambia website. You will be able to see all the registered fund managers. Visit them, consult with them. Let them know that this is what I want to start with. I am saving because, let's say, in the next 15 years, I want my son to go to university and I want to start saving. They will be able to guide you. So as always, do your research. We live in an information age. Do your research online. Visit a fund manager. Visit a brokerage firm. Get as much information as you can before you invest.
Wonderful.
Yeah.
The stock exchange is often seen as something far away from our
Yes.
daily lives. So can you break it down, Grace, for us? How does the stock market actually help grow the economy and create job opportunities for
Yeah.
citizens?
So what we've seen, particularly in the last 2 to 3 years, is our Zambian stock market has really woken up. We've been consistently in the top 3 best performing stock exchanges in Africa. Last year in August, we were actually the best stock market in the world. And Bloomberg is the one that gave us that title. So it's a good indicator of how the Zambian economy is moving. When your stock market is lively, it shows that there are investors who are interested. We've seen a lot of foreign investors as well looking our way. When you have more money coming in through the stock market, you tend to see that a lot of our listed companies are now growing, even in international coverage. They're now able to expand into other markets. Being listed on the Zambian Stock Exchange gives you credibility. And we found that the companies that are listed tend to have a higher international profile. And because of that, as this is a capital market, they're able to raise money, even from foreign investors. When you go out, even if you're looking for external debt, for instance, and you say, I am listed on the Lusaka Securities Exchange, it gives you more credibility out there. And people are able to say, this company has the backing of the Zambian population. Let's see what they're doing. And we're very excited at the Luce because we now have 4 companies that are valued at over $1 billion US dollars. That's Copperbelt Energy, ZCCMIH, Zambia Sugar, and most recently Airtel. If you look at the profile of these 4 companies, they're spread across different industries, but they also show you that we are growing as a Zambian economy as well. We're seeing a lot more retail investors getting in, which means we're also now building generational wealth. Because if you look at most of these members on the Forbes list, the richest people in the world, a lot of their money is sitting in the stock market. And the more Zambians we have coming in, we're actually building generational wealth, because shares are assets. These are assets that you can pass on to your children. They can also live off your dividends. We have certain investors who have stopped working and they're just relying on what they're doing with the stock market. So it's giving people financial independence as well. When it comes to creating jobs, of course, as companies grow, they tend to employ more people. If you look at Zambia Sugar, it's now the largest manufacturing plant in Africa. So we're slowly changing the narrative on what it means to invest and how everyday Zambians can benefit from that. We've had amazing stories of investors using their dividends or using the proceeds from selling of shares or whatever investments they've done to start their own businesses. We're now at a point where we have a secondary tier called the alternative market. The alternative market is made specifically for SME businesses because we've realized that SMEs are basically the backbone of the Zambian economy. A lot of our Zambian businesses need capital to scale. They need money to grow, and debt is expensive. So we're really trying to push the alternative market agenda because when you raise capital through the Luce, it's not debt. Remember, I started by saying as a shareholder, you are saying, I am part of your journey. And the beauty with raising money through a listing is because it's not a debt, you are not under pressure to pay back the money, because that usually is what kills a lot of businesses, because now they have to do cash flow projections, incorporating an element of debt. But when you raise money through a listing, it's not a debt obligation. You can always let your shareholders know that we are still in a growth phase. We've seen that recently with .com Zambia. They listed towards the end of last year, the first one to come on the alternative market, and we've seen phenomenal growth with .com. They've grown, and we're looking forward to seeing them grow a lot more. And we're looking forward to having more companies listing, and that's how we're contributing to the economy.
Wonderful. So as we come to the end of the program, Grace, what are your closing remarks as regards to investing in the capital market?
Start with what you have today. Don't wait for tomorrow. As long as you have even a 50 kwacha in your Airtel or MTN money, download the Luce mobile app. Start doing your research and see how you can be part of the Zambian economy. We've got a wide variety of listed companies, telco, fast-moving consumer goods, there's Copperbelt Energy, there's Zambia Sugar, just to name a few. Brands that you're interacting with every single day, why not become a shareholder? So download the app today, start with what you have, whether it's a 20 kwacha, whether it's a 50 kwacha, get started, do your research and consult before you make any financial decisions. The future is in your hands, and the future is not tomorrow, it's today.
Excellent. So, Grace, thank you so much for coming through to the program.
Thank you for having me.
Viewers, that's where we end today's program. On behalf of the entire Zanis production team, this has been Faith Katai. Thank you for watching. Goodbye.